Millions of Americans rely on Medicare for their healthcare needs, but 2026 is shaping up to be one of the biggest years of change in the program's history. What's being called the Medicare Reset could affect nearly everyone on Medicare, from those on traditional plans to people enrolled in Medicare Advantage. Insurance companies are restructuring their offerings, government reimbursements are shifting, and certain plans that exist today won't be around next year. So if you're on Medicare or about to enroll, what's actually changing, why is it happening, and what do you need to do about it before the clock runs out? Let's unpack all of that today. Right now, about 69 million Americans are on Medicare. And of those, more than half, roughly 37 million, are enrolled in Medicare Advantage plans. These plans, run by private insurance companies, often combine hospital, medical, and drug coverage with added perks like dental, vision, and hearing. But that system is about to experience a major shakeup. Beginning in 2026, hundreds of Advantage plans across the country are being discontinued. The result? More than 1 million people are expected to lose their existing coverage and will need to choose a new plan before January 1, 2026. Now, this doesn't mean Medicare itself is ending. But it does mean that the landscape of available Advantage plans, who offers them, what they cost, and what benefits they include, is being completely redrawn. And if you don't understand what's changing, you could find yourself without the coverage you thought you had when 2026 begins. Let's start with what's actually happening. Many of the biggest insurance companies in the country, including United Health Group, Humana, Aetna, and others, are eliminating certain Medicare Advantage plans. United alone announced it will exit plans that currently serve over 600,000 members, mostly in what are called PPO or Preferred Provider Organization products. PPOs generally offer more flexibility, allowing members to see more doctors and facilities, including some out-of-network care. But that flexibility comes with higher costs for insurance companies. They're harder to control, and in a time of rising healthcare costs, they're less profitable. So what these insurers are doing is cutting back on less managed PPO plans and refocusing on tighter, lower-cost HMO models, health maintenance organizations, which generally don't allow out-of-network care. This shift will save the insurers money, but it also means fewer choices for consumers. Many people who love the freedom of PPOs will now have to settle for more restrictive options or pay higher premiums to keep similar benefits. And it's not just United. Multiple insurers are scaling back Advantage offerings in certain counties, cities, and even entire states. This is being done to manage losses, because, believe it or not, many of these companies have been losing money on certain Medicare Advantage plans. That might sound hard to believe since insurance companies are known for turning profits. But under the Medicare Advantage system, the federal government pays these insurers a set amount per enrollee each year, typically around $1,000 per month per person, to manage all their care and benefits. If healthcare costs rise faster than expected, the insurers end up eating those losses. And that's exactly what's been happening. Over the past 3 years, 3 major forces have collided to make Medicare Advantage more expensive for insurance companies. First, the overall cost of healthcare in the U.S. has risen faster than inflation, meaning the cost of doctor visits, hospital stays, and procedures has gone up significantly. Second, people are using their benefits more often. After the pandemic, there's been a surge in the number of people scheduling elective surgeries, screenings, and ongoing care. Third, the Inflation Reduction Act shifted more drug cost responsibilities onto insurers, especially for expensive prescription medications. Combine those 3 factors, and suddenly, Medicare Advantage plans that once made sense financially are now losing millions. So, these companies are reacting by eliminating unprofitable plans, the 2026 Medicare Reset. But here's what that means for you. If your current Medicare Advantage plan is being discontinued, you will not automatically be moved to a new plan. There's no automatic transfer, no crosswalk, as it's called. When a plan is terminated, the insurer can't just move you to a similar plan. Instead, you'll revert to original Medicare, and that means you'll lose any added dental, vision, hearing, or prescription coverage your Advantage plan included. If you take no action, you could wake up on January 1, 2026, with only original Medicare Parts A and B, no Part D prescription coverage, no Advantage benefits, and potentially much higher out-of-pocket costs. That's why it's critical to act during the right enrollment window. Now let's talk about those dates because they're a little different this year. Normally, the Medicare annual enrollment period runs from October 15 to December 7. During that time, anyone on Medicare can make plan changes for the next year. But if your Advantage plan is being eliminated, you have an extra window, until December 31, to enroll in a new plan that will take effect on January 1, 2026. If you wait past that date, you'll have a lapse in coverage. So what should you do? First, pay attention to your mail. If your insurance company is discontinuing your plan, they're required to send you several notices this fall. These letters will explain what's happening and outline your options. Don't ignore them. If you use a Medicare broker or agent, contact them as soon as enrollment opens in October. They can help you compare plans and find something similar, or maybe even better, than what you currently have. If you don't have a broker, you can contact Medicare directly or use the Plan Finder tool on Medicare.gov. Before we go deeper, here's a quick reminder. If you're finding this information helpful, make sure to subscribe to our channel. We share important Medicare updates and guides every week. Now, let's look at the deeper why behind all of this, the financial engine that drives these decisions. Medicare Advantage plans operate under a rule called the Medical Loss Ratio, or MLR. This rule says that at least 85% of all the money an insurance company receives from the government must be spent on medical care and quality improvement for members. That sounds good in theory. It ensures that most of your premiums and federal dollars go toward actual healthcare, not profits. But when healthcare costs spike and drug prices climb, that 15% margin for administrative costs and profits shrinks. For some insurers, it disappears entirely. Think of it this way: if an insurer receives $12,000 a year per enrollee, they must spend at least $10,200 on medical and quality care. That leaves about $1,800 for everything else: marketing, staff, call centers, and profit. If costs go up beyond that, they're losing money. Multiply that across millions of enrollees, and you can see why some insurers are saying enough is enough. They're cutting plans that lose money and refocusing on those they can manage more tightly. That's the foundation of the 2026 Medicare Reset, a systemic recalibration of risk, cost, and profit. But here's the important part: this isn't just an insurance company issue. It affects everyone on Medicare. Because as insurers consolidate plans, competition can decrease, and fewer plan options often mean higher premiums or reduced benefits. Some plans that were free, those famous $0 premium Advantage plans, might now start charging monthly fees. Others may add new deductibles or copays, or require referrals to see specialists. Even the list of approved doctors or hospitals could change, as insurers tighten their networks to save costs. And remember, not every insurance company is just trimming plans. Some are leaving the Medicare Advantage market entirely. Smaller insurers, in particular, are deciding it's no longer sustainable. That means some regions will have fewer plan options overall. So, if you're in a rural area or a smaller county, your 2026 choices might look very different from what you have now. Now let's talk about your options if your plan disappears. Option 1, choose another Medicare Advantage plan, either from your current insurer or a competitor. That's the simplest path for most people. You'll still get your bundled benefits, medical, hospital, and usually drug coverage, plus any extras like dental or vision if the new plan includes them. Just make sure to review the network and prescription coverage before you switch. Option 2, switch back to original Medicare and add a Medicare supplement plan, also known as Medigap. Normally, switching back from Advantage to a supplement plan requires medical underwriting, meaning you can be denied based on health conditions. But here's the good news. If your Advantage plan is discontinued, you get a special right called Guaranteed Issue. That means you can buy certain Medigap plans with no medical questions asked and no higher cost than anyone else your age. This window begins 60 days before your plan ends and lasts for 63 days after. But if you want continuous coverage starting January 1st, you'll need to apply before December 31st. There's one catch. Not all supplement plans are available under Guaranteed Issue. You can choose from plans A, B, C, D, F, or G in most states. Plan N, which many people like for its lower premiums, usually isn't included. And Plan F is only available if you were eligible for Medicare before January 1, 2020. So, if you're newer to Medicare, your best Guaranteed Issue option is likely Plan G. If you do switch to a supplement plan, remember that you'll also need a separate Part D prescription drug plan, since original Medicare and Medigap don't cover medications. You can use Medicare's Plan Finder tool to compare Part D options and find the most cost-effective one for your prescriptions. One more thing you should be aware of: not every insurance agent will be able to help you during this Guaranteed Issue window. In many states, insurance companies don't pay agents for helping people switch under Guaranteed Issue. So if you find it hard to get assistance, that might be why. Don't take it personally, it's just how the system is structured. If that happens, you can still manage the switch yourself using Medicare's resources or independent tools to compare plans. Now, beyond Advantage and supplement plan changes, there are a few other shifts happening in 2026 that feed into this broader Medicare Reset. The Inflation Reduction Act's reforms will continue to phase in, further capping out-of-pocket prescription costs for seniors. That's good news for beneficiaries but adds even more financial pressure on insurance companies. There's also an ongoing effort to recalibrate how Medicare pays insurers based on risk scores, a system that determines payments depending on members' health conditions. The government has cracked down on inflated risk coding, meaning insurers could get less funding per member. All of these changes make 2026 a transition year, a reset where both Medicare and private insurers are trying to rebalance the system. So, what should you take away from all of this? First, don't panic. These changes aren't the end of Medicare. They're a response to rising healthcare costs and financial imbalances that have been building for years. But they do mean you'll need to pay closer attention to your coverage for 2026. Don't assume your plan will automatically roll over. Check your annual notice of change letter, talk to your agent if you have one, and mark your calendar for the enrollment windows. Second, be proactive. Whether you're on Advantage, considering switching to a supplement, or about to enroll in Medicare for the first time, 2026 will offer both challenges and opportunities. Some plans will disappear, but new plans will emerge. Those who compare and choose carefully can actually come out ahead. And finally, remember this: the Medicare Reset of 2026 is not a one-time event. It's part of a larger trend toward cost control and market consolidation that will likely continue into 2027 and beyond. Staying informed is your best defense against unwanted surprises. If you're finding this video helpful so far, take a moment to subscribe. We post updates like this every week to keep you informed and prepared for every Medicare change that might affect you. As we move into 2026, one thing is clear: Medicare as we know it is evolving. The combination of plan reductions, tighter regulations, and new cost-sharing structures is transforming how coverage works. For some, it will mean fewer perks. For others, it could finally open the door to better, more stable coverage options. But one thing's for sure: you can't afford to ignore what's coming. The Medicare Reset is real, and it's already underway. If you found this topic helpful, we've covered other related Medicare updates you'll see at the end of this video. Watch those next for deeper insights.